Hello, traders. So I wanted to share something with you. This is not a suggested trade. This is a concept that I want to get out to everybody. So I have, obviously, as many other people do, kind of long-term buy and hold positions. I have positions in Google, and I have not only some stock positions, but I also have some leaps that I purchased when the market was at its, at much lower points. So bottom line is this position, if we take a look at our charts in Google, I mean, Google has had a huge run up here. Now, I have historically been bullish on Google largely because of their ownership of YouTube. And I know that I use YouTube a lot. I know that it's the number one thing my grandkids watch. They don't watch TV anymore. They watch YouTube. They watch people unwrapping Pokemon cards and other crazy stuff. So, bottom line is I think that's actually a huge asset in Google's arsenal. All that said, we can see that Google's had a huge run. Now, this is a weekly chart here. It's had a huge run back up to what some might consider resistance. And this is a really hard and fast run as well. So a case could be made that Google might level off here for a little while. Maybe even pull back a little bit. But the flip side of that is it has its barred artificial intelligence, kind of like ChatGPT going for it. So anything that is artificial intelligence or .ai related right now, it's kind of like .com back in 98, 99. So again, take what I'm saying with a grain of salt. But the bottom line is I am starting to go through, look at long-term positions that I've held like this. And one of my standard moves is when you have kind of a parabolic move like this over a couple of weeks, and I think that we might be nearing exhaustion. Again, obviously there's no guarantee of that. I start coming in and I start selling calls against this. So what I did here is I went out and while these are out at much further points in time, I am selling shorter term calls against those long-term positions. So, what does that do for me? Well, in this particular case, I sold these 5 calls for a little over, $1,000, $1,200 or so. And I sold those at 135. We're currently trading at 124. So long as Google stays below 135 between now and expiration on August 23rd, I get to keep that money of that $1,200 or so dollars. Now, if this does rocket up beyond 135, I'm going to be losing some money in these calls. I'll either need to buy them back is the most likely scenario, or I'll be able to let some of my stock get called away from me if I were to want to do that. I would not want to do that because of capital gains and taxes here in the U.S. because I've held this position for quite some time. But there are different things that could be available to me at that point. But again, I'm not going to put this trade on if I think I'm going to be run through unless I'm ready to sell the stock, the underlying, which I'm not in this particular case. So I just wanted to share that concept with people that while we have had this big run up, and everybody has to form their own opinion of, is this going to be sustained? Is this going to be continuing to rocket up? In which case, you may not want to do this yet. If you think there might be a pause going into summer, and some stabilization or even a little bit of pullback, then maybe this is something to consider. Now, keep in mind, I've got the equivalent of 1,000 shares here, and I've only sold 5 calls against that. If this were to go up a little higher, if this thing were to rocket up, say, into the 130, 135 range, I may even come in and sell an additional 5 at yet a higher price. And of course, if I were to do that, then that's going to kind of cap off my risk profile here. But yet, look at the amount of additional premium I mean, that's what, $4,000 in premium that could be picked up on that in a month and a half period of time. So again, so those are things that you can consider. You can do this in an IRA as well. This doesn't happen to be an IRA, but in an IRA, if you hold long positions, you can sell one short call against each 100 shares. You cannot oversell. In other words, if you have 200 shares, you can't sell 3 calls. You could only sell 2 calls. But again, keep in mind that means that the stock, if you don't close that position, could in fact get called away from you at that point if it gets run through. So this is just kind of a little teaser, if you will, for lack of a better term, on some things you might consider in some long-term accounts given the current run-up in the market. And again, I'm not going to pretend to make any specific recommendations here other than it's a time for each individual person to maybe look at the positions that they do have and decide individually if any of those positions might warrant something like this being done on them. So hopefully you guys find this at least interesting and intriguing, kind of some food for thought. That's it for now. Thanks.